You asked, I'm here. What's up, everybody? This is Mark Monroe from The Come Up, and today it's Ask Me Anything. Shatori asks, how do you know when a stock is just correcting or when it's changing the trend? All right, so typically when you see a stock correcting, you see it coming down from its highs or 52-week highs. You typically see it drop about 10%, sometimes 15%. When you see a change in the trend, you typically see it going to, say, for example, at least the first support level, or is playing within a range of, I think it's typically 2 to 5%. How does one get an appointment with you to pitch an idea asking for my wife? Ryan Marshan, 752. Ryan, how does a person get a pitch with me? Just reach out. I'm available via LinkedIn. I don't want pitches via Instagram. I mean, that's kind of weird. But if you send me a pitch through LinkedIn, you could typically send me like a pitch deck, whether it's PDF or in PowerPoint format or a website link, preferably PDF through LinkedIn. And keep it short, sweet, and if it makes sense, then it's something that I may look into. Sean says, do you ever day trade? Sometimes. Not all the time, because most of the time I'm trading in long-term positions anywhere from 1 to 2 years out. But if I'm doing a put hedge against myself, then that's considered, I guess, short-term trading. If I do see an opportunity, like for example, a la, shorting a company like Nikola, or doing a Tesla, or any other company that's out there that I see that there's a great opportunity for, I will definitely take the opportunity. But for the most part, my strategy remains pretty intact, which is focused on the long term, and everything else falls into place. Rard the Ruler, I hope I said that right. Rard the Ruler says, what companies do you believe have the most promising futures and why? Well, I typically say that you see a lot of millennial-based companies that are now stepping into the forefront and they're growing up. When you look at the social impact of what's happening, you see the change in generations. I mean, of course, you still have baby boomers and Gen Xers around, but what you're starting to see now is the millennial generation stepping into the forefront, along with your Gen Zers, kind of like, okay, hey, we're growing up too, so don't forget about us, and we got our own thing going on. And you're really gonna look at companies that are really making significant impacts. And if you pay attention to what each generation typically goes for, or what is within their wheelhouse of what impacts them socially and economically, then it's really easy to really spot like who the winners are going to be. Now, of course, you have some, generational winners, and then on top of that, you have some all-time winners that no matter what the generation is, they're always going to be around. If I had to pick, like, say, for example, a company that's always going to be around, like an Apple or a Microsoft, I think Amazon's definitely going to be around for a very long time. And I think that what you're starting to see that's a generational company as of right now are like your Teslas of the world, your Shopify's of the world, your so on and so on. So I can probably draft up a list, but you can kind of see where I'm going with this. So there you have it. Okay, hey, it's Franklin asks, how do you find the 2-year performance price to calculate the strike price? Well, there is a wonderful website called Bar Chart that you can check out where they have a performance report. I think we mentioned this on the Come Up series. Check out the episode that we did with Head Coach Head. Let me just redo that. Hey, it's Franklin ask, how do you find the 2-year performance price to calculate the strike price? There is a wonderful website by the name of Bar Chart, and I think we discussed it in some of the episodes, but if you really want a specific episode to see how it works, go check out the episode that we did on Trade Talk Tuesday with Head Coach Head. There's a lot of great information there, and it walks you through kind of like the process of how we got there. I think there's also even a spreadsheet that's in the description that has been left behind. The Spoken Word asks, what's the benefit of investing into an ETF versus stock, and vice versa? All right, so I asked a question earlier this week about What's the difference between investing in, or what's the difference between 100% return in Apple stock option versus 100% return in XOK's option return? And it was kind of a trick question just to see what everybody was thinking, but pretty much there really is no real big difference when you think about it in the options market, because the only thing that you have to really think about is exactly, one, how much have you invested with? The risk that you have to look at when you're investing with an ETF or a stock, or with really a stock, is that it's a singular position, which means that you carry on all the risk. So if, say, for example, that stock drops or goes up, you feel the reward, or say, for example, the pain. If it's in an ETF, then it's also cushioned. The blow is not as hard because of the fact that there's other stocks that are pretty much insulating it in the process. So your blowback isn't going to be as hard as it is in an ETF versus being in a stock. Think Biggs ask, what are the top things you look for when studying a company's fundamentals? Now, I think that we've done this multiple times, but we look at, of course, balance sheets, and we look at earnings. We also look at analyst reports and see how those coincide with earnings, as well as the guidance within the earnings. Then we look at the social impact, and then from there we project how will the company move forward down the road. Now, a lot of times I say never give a seasonal trade lifetime expectations, so which means that if you're in a trade for, let's say, an option for, say, for example, 6 months, you can't apply that 3-year strategy towards that 6 months, because that's just not fair. If you're in it for 6 months, then you really have to be in it just for really what you expect for 6 months. You see what I did there? I am B. Clay. I am B. Clay asks, Ford discontinuing many of its mid-sized cars, do you think an EV company acquisition is coming? I don't think so, but though that anything is possible, since there's a lot of saturation that's starting to step into the market in the EV space. Though that you're starting to see a lot of the EVs jumping in, but you haven't really seen a defined leader outside of Tesla, who is the ultimate leader. But I think that Ford and many of the major auto manufacturers have more than enough capital as well as technology to be able to, say, for example, develop their own EV vehicles. And I think that they're already doing that. Now, you have seen some companies partner with, say, for example, companies like Rivian, where they're taking on some of their framework technology for their SUVs and their pickup trucks to bring into their forefront. But Audi already has an electric vehicle, BMW has an electric vehicle, Porsche, and I think Volkswagen and many others. So I think that you're going to start seeing more EVs in the space. So I don't see an acquisition coming. It just doesn't make any sense to me, but it's possible. I could be wrong. You hear that? You always say that you don't hear that, and next thing you know, when we
No, I hear it. No, you were done.
Okay. So Dawnism 2.0 asks, can you do an actual option trade from entry to exit for us noobs? Sure. I guess we'll set up an episode where we actually do a deep dive in options, and we'll show you how to buy an option and also how you sell it. Now, disclaimer, keep in mind, not every single brokerage platform works exactly the same. So how their systems are set up may be a little bit different, but the grand gist should be there. I would definitely urge you, though, to for sure do more research, because there's a lot of also information out there on how to trade options and going in. But we will do an episode for you, specifically just for you. Who Saved You asks, contracts that's in the money, do they decay at the same rate as that's out of the money? So I guess what you're asking is, do the contract, if you're in an options contract, do they decay the same if, say, for example, you're playing in the money versus out of the money calls? No, they're different. But there's a piece that you're missing there also. You also have to look at the time. And so, for example, if you're playing in a long-term position, then given that time is on your side, it's not going to decay the same versus, say, for example, if you're playing short term, where the decay is very much so real. Ask anybody who's, say, for example, did call in Kodak or call in DraftKings. Just asking for a friend. The Queen Shay. How do you determine exact entry and exit points? So I've been getting a lot of questions there. And instead of me answering this question today, because it's going to take up a lot of time and information, what I will do is we'll schedule that one for another episode, along with, say, for example, buying options, calls, or puts, whatever it is, and selling them. We'll do that in the same episode, just for YouTube. I am Shanice asks, can you explain what it means to take profit? What is the process? So when we say take profit, that means that you've earned a substantial amount of gain in your position and you're selling. Yeah, you're selling. Content Collective with a K asks, when hedging against your position, what's the best way to maximize your profits? One, make sure that your other position is playing at all-time highs, and also make sure that you're looking at the volume in the actual stock to see if it's decreasing. And then two, set your positions realistically. Set your expectations very realistic. Typically what I like to do is play towards the first support level. So for example, if we're at all-time highs, I'm going to set it towards the first support level, so that way if there's anywhere from a 2 to 5% drop, I'm there. More Pips 67 asks, if you could recommend one book on options, what would it be? That's crazy. You know, the funny fact, when I first started trading options, I didn't have a book to actually go by. What I did was I studied the fundamentals of actual stock first, but there are a ton of books out there. Like for example, you have the Nigerian brothers and which that they have option books. I think I posted a book on my Instagram page. Go ahead and check that out. The name, I think it's Stock Options for Beginners. It's a good place to start. They have an actual audio book through Audible that you can check out. I think that would be a good place for you to get going. But there's other great books, like for example, Intelligent Investor, for those who want to get to understand the stock market and stocks in general. I say if you understand those things and understanding how the options market moves, it becomes a whole lot easier. All right, so that was a lot of questions. That lets me know that there's a lot of episodes on the horizon. Hopefully I answered your question. If I didn't, then, we may just do another one. Let me know what you think. But until next time, you ask me everything. Peace.